Hello traders, in this video we're going to be taking a look at CME Gaps. Now this is a strategy that we're seeing used an increasing amount of time by Bitcoin retail traders because of the amazing reliability that these gaps have had in filling over the past few years since CME started trading its Bitcoin contract. Okay, so is it really one of those holy grail trading strategies that you can simply look at where a CME gap is and know how to trade it, or is it a bit more complex than that? Okay, in this video we're going to be taking a look at what is a CME gap, why they are important, how to calculate the CME gap, and some ways in which you can trade these gaps. Okay, so first of all, what is a CME gap? So CME is the Chicago Mercantile Exchange. It is the world's largest derivatives exchange, and it trades everything from agricultural products such as corn and grains to your precious metals, to your energy products, stocks, and of course Bitcoin. So the CME Bitcoin contract trades on average around about 10,000 contracts per day. One of those contracts is worth 5 Bitcoin. So that's about 50,000 Bitcoins worth of volume every day, which is equivalent to $2.5 billion per day. Okay. However, unlike crypto, it does not trade 24/7. It closes over the weekend and for short periods of time during the week for settlement, and this is how these gaps appear. Now, the difference in price between when the exchange closes and reopens creates a gap. Okay, and we can see on this chart here where these gaps start to appear. So very simply, first of all, in order to find the CME chart itself, you just need to search BTC1 exclamation mark on Coinbase and you'll be able to find this chart. Okay, so when you open this up, you can see these gaps in the chart, which Bitcoin on any kind of normal exchange that as a retail trader would be used to seeing would not normally have. So you can see varying sizes of these gaps, from these really large ones to these tiny little gaps you get here where price pretty much opens and closes around the same price. So that is, first of all, what a CME gap is. So secondly, okay, why are they important? So historically, and CME has been trading since the very early stages of 2018, when we went into that previous bear market. The gaps that we have had within Bitcoin have filled over 95% of the time and have an average size of 3%. So you're looking at this as being incredibly reliable over the course of a number of years now, with these gaps almost always being filled and actually getting a pretty decent size of gap from them as well. So basically, if you know the price in which institutional traders have settled up, then you can plan a trade based off of that information. Okay, so it's widely accepted that these gaps are almost a bit of a self-fulfilling prophecy. Okay, if you know that there is a level on the chart and that there are a lot of traders looking at that level, then it naturally is going to act as a magnet for price, or you're going to get those kind of reactions when price does come into those levels where those gaps are. However, there is data you can use, such as CME open interest and COT, which is the commitment of traders, which can determine whether a gap is more or less likely to fill. However, it is best used in confluence with other trading strategies to trade effectively. Okay, so there's tons of other information that you can get from this, but very simply, it is more often seen that it is that self-fulfilling prophecy of just these gaps being a good level that a lot of the market are looking at. So let's go over here and we'll start to take a look at this on just a normal exchange and how you can kind of plot it and trade it. Okay, so obviously as traders ourselves, we are not going to be, as retail traders ourselves, we're not going to be over on the CME trading those charts. So it's important to understand how you can use the different tools available in order to plot those gaps on the chart of your chosen exchange. So how to calculate the CME gap? So first of all, you use your chosen exchange, whether that's Bybit, Coinbase, FTX, Binance, whatever it is you use. Okay, and the first method for this is you can manually plot the close and open times on your chart to see the price of the CME gap. Now, the time that the CME closes is Friday night at 10 p.m. UTC. okay, and the time in which it opens is the CME Open, which is at Sunday at 11 p.m. UTC. So the most simple way in which to do this is to simply plot on your chart the CME close and the CME open, and this creates your gap. So this really should just say here CME close, and then you have your CME open. So we can see as we zoom in on this, at this time here, 10 o'clock on Friday the 10th of December, we had that CME close. Okay, then moving on, we have 11 o'clock p.m. On the Sunday the 12th, which is when your CME opens, okay, and then this is the gap that is created. And as you can see from today, there has been this gap fill on the chart. So that's the most simple kind of way of plotting these levels. However, there are indicators you can use which do show the CME, these gaps on the chart. So one that I like to use is called Bitcoin CME Gaps by someone called Neobutane. So simply search on here, go to your Bitcoin CME Gaps, and this will be basically that first one on here. Now there are other ones available as well. We can have a look at this one quickly, see what that gives us. Nothing. Okay. However, if you are to use the one that I've just shown you, this neobutane one, then it will give you the gaps, which look something like this. Okay, so you can see this is these green gaps being when price is trading above the gap, and obviously these red ones being when price has been trading below the gap. So this whole period here is when the CME market is closed. Now again, this does change. The timings from this will change slightly depending on daylight savings and kind of what time zone, or whether you're getting those +1 kind of time zone things that we do in the UK in the summer and that you do get in the US in the summer as well. However, if you go over to cmegroup.com, you can find all the information for the Bitcoin contracts on there that do give you your CME trading times. So you can always adjust these whenever is necessary in order to get those new times on your chart. Okay, so that's very simply how you do plot these on your chart, so by using these times here. Now once we've got that, we need to look at how you can look to trade the CME gaps. So there are three main methods in my opinion that you can use to trade this. So the first one, which is probably the easiest method for trading these, is to fade the weekend move. So what I mean by that is you are aware of the CME close price, so you should look for shorts above and longs below. Be more aggressive as the weekend comes to an end. Take profit or close when gap is filled. Okay, so what I mean by that is, let's say price is coming along here. Okay, then you get your CME closes at this point. So what you should look to do is, as the weekend goes on, okay, you can see CME is closed but price continues up. You should be looking for short positions with the expectancy that this is going to act as a magnet later on within the weekend, throughout the weekend, or on the Monday. So you can look for your short positions using standard methods of TA but with a bias to short. Then if price comes back below, let's say price comes down here, you should then be looking for those long positions, again with the expectancy that this is going to act as a key level when markets reopen on that Sunday night. Okay, so that's the first method that you can look for. The second is to trade the gap itself. So you can take a scalp trade against the local trend as you hit the level where the gap is. So once again, let's say that there is a CME gap created here. Okay, prices come through, CME's closed here, it continues on higher, you're looking for that short position, maybe you didn't get the short position, but you wake up on the Monday and you see prices coming down. Okay, it's trending down, it's trending down, it's trending down. You know where your level is, you can look for one of those quick scalp trades off of the actual level itself as you get other traders having taken profit at that level. Okay, so that's the second method that you can use in order to trade these gaps. The third is the most complex one, okay, and that is to counter the gap traders. So this is based off of the concept that basically if there are too many traders looking for a certain trade, It's not likely to work out that way, okay? So if there are too many traders looking for a gap fill, you can take the opposite position. Overcrowded trades are less reliable, so you can counter the move and look for a trade which will hit the stop losses of these traders. So once again, okay, here is your gap down at the bottom here. Prices come up, it's created this gap. Price continues higher, reaches a little local high, and then maybe at this point here, this is the Sunday night where price starts to reopen. Okay, now what you could often expect at this point is a lot of traders are thinking, oh look, we're going to come back down and we're going to fill this gap. But what happens more often, well, we'll go over the statistics for this in just a moment, but what can sometimes happen is, okay, we can see that there's a swing high up here. This is probably where they're going to be placing their stop losses, right? So let's quickly counter that, stop them out, and then you can look for this move afterwards. So you could actually take that trade against the gap itself in order to look to counter that if it is overcrowded, to quickly stop those out, to get that quick move up. Before, of course, then taking other trades later on, which could always come down into this gap itself. So that's one of those additional strategies that you can use. And the other thing is that sometimes you could just continue this and you could continue higher and higher until a point where no one's really looking at this gap, and then eventually it does come back and fill. Okay, so those are really the three main methods that I use for trading these gaps. But of course, it's always used with confluence with basically other trading strategies that I do have. So let's just have a look at some notes for traders on this, okay? So let's make it a little bit easier to see. So some notes for traders here. So gaps fill 95% of the time in time, okay? So that does mean that out of all the gaps that there are on the Bitcoin chart, 95% or actually more than that now of those gaps have filled. 70% of those gaps will fill within 1 week, and 35% of those gaps will fill within 24 hours. Okay, so that seems pretty good, but you've got to remember that you don't really know how quickly these gaps are going to fill. They could take hours, they could take days, they could take weeks, they could take months. The reliability of them filling within 24 hours is pretty decent. But again, which one of those three trades are you going to take? Are you going to be looking for the scalp from the trade, from the level itself? Are you going to be looking to fade that move, or are you going to be looking to counter it? So you've got to put all of these factors into your kind of thought process as to whether these are a good trade to take. Another important bit of information is the smaller the gap size, the higher the probability of a gap fill on Monday. Now that makes complete sense, right? Okay, if you open a gap 1% away from where price currently is, it's going to be relatively easy for price to just come down, fill that gap, and continue doing whatever it wants to do. However, if you do see something like we have all the way down here with a gap of around kind of 10-15%, it's going to take a lot of money for the market to fill that the following day. So it's very unlikely that you're going to see that gap filled straight away. Okay. Another important piece of data here is that 55% of gap fills see a counter trade stop hunt before reaching the gap, with the majority of these stop hunts occurring on smaller gaps which are being looked at by more traders. So once again, okay, the smaller the gap size, the higher probability of a gap fill on Monday. But again, that increases the probability that you're going to have one of those stop hunts before eventually going down and filling that gap. So is it a good idea just to simply go, okay, price is gapped up, we are above where the CME close was on the Friday night, as we were today, let's just short it at 11 p.m. on the Sunday, looking for that gap fill with stop loss above previous high? Doesn't really look like that's a very good strategy, okay, especially when half of those are going to get stopped out. It's not giving you the best kind of risk to reward based off of that. Okay, so again, another important factor that you need to put into account. Something else here, gap fill bounces do not give a good return, with an average bounce of just 0.6% before losing a level. So this is going on to our point 2 here. You can look to scalp those reactions, but be aware that if you are going to scalp them, you've got to get in and out really quickly, okay? It's very rare that you see, once again, here's your gap. It's very rare, let's do it the other way, that you see gap open, here goes your weekend trading around that level, opening below, and then you are looking for this scalp trade on the Monday. It's very rare that you'd see this just continue lower. What happens more often than not is what you'll see is moving up into price, getting a quick reaction, and then actually continuing through the other way before maybe eventually reversing it. Okay, so you got to look at those scalps as being really quick in and out, and around 0.6% is your average return on that before you're likely to get stopped out on that trade. So my basic takeaway from this is that gaps can be a useful addition to your trading strategy, but should only be traded when there is confluence with other methods of technical analysis. So be aware of what else is going on. Use your general market structure, take a look at your order flow, and just be aware of those. Okay, so hopefully that video was useful. Hopefully now everyone, you're aware of how you can plot these on your charts, the times in which these CME gaps do open and close, or the time in which CME opens and closes, and how you can plot these on your charts, and also just some ideas of how you can trade that with a realistic expectation that it isn't as simple as just gap 95% that you're going to win a trade, okay, despite the fact that 95% of these gaps do fill within time. So use it as a confluence, use it to maybe form a basis for your week's trading, but of course use your other methods of technical analysis to get the most out of these trades. So yeah, thank you very much for watching. I hope that was useful. Please do like and subscribe to the channel, and check out tauruscrypto.com if you would like to have any more information about our community. We do have a free Discord that anyone is welcome to join, and of course we do have the crew membership, so check out tauruscrypto.com, and on Twitter, Taurus Crypto. So yeah, thank you very much for watching. I'll catch you in the next video. Cheers. Bye.